You just bought a house and now you have this huge mortgage weighing on your shoulders. If you have a little bit of money now, should you pay off that mortgage or rather invest that money? That's what Bruce Banter 99 was asking on the EU personal finance subreddit, and that's what I'll be answering in this episode of Financecouch. Here are the facts. Bruce Banter 99 has a mortgage of 190k with a fixed interest rate of 0.86% for the next 10 years. Congrats first of all. And just in case anybody's wondering, that's usually what we're doing here in Germany, and apparently in the Netherlands as well, fixing interest rates for 10, 15 or 20 years. More than 20 years is really difficult here in Germany, as that's the maximum for most banks. And even if, with the mortgage rate table on our website PerFinEx.de, you can see that you have to pay quite an interest rate premium the longer you want to fix. 20 years is almost 1% more expensive than 10 years. But Bruce got an incredibly good interest rate, most likely in 2019, 20 or 2021. Those were the years when we had below 1% mortgage rates, at least here in Germany. Now your question is, with that interest rate, should you actually pay off your mortgage as fast as you can? Which is a very legitimate question that I feel many of our viewers, or people in general, don't seem to put much thought into. I gotta say it like it is, guys. I'm not even sorry. The general thought seems to be,
I pay off my mortgage as fast as I can. Then I live completely rent-free.
First of all, you will never live rent-free, as your home will always cost you money with renovations and everything. But that's maybe for a different video. And then, do you know the sentence, house rich, cash poor? I get it. You want to free yourself of the mortgage payment and of the interest rate payment that is a waste of money anyways, right? Having a mortgage means stress, and interest is a waste of money, I'll give you that. But those are very psychological and emotional arguments. And as a financial advisor, it is also my job to tell you when you are rationalizing financially bad decisions. So let's bring some rationale and reason to this. When you have a mortgage of 100k with an interest rate of 1%, you are wasting 1,000 euros every year on interest that you pay to the bank. I know that in a standard mortgage, the interest rate and the principal payment, they vary every month, but I want to keep this as easy as possible so everybody can follow along. Now let's say you suddenly get 100k, so you could pay off your mortgage immediately. Should you do it? Well, it will save you 1,000 euro every year in interest rate, that's for sure. But 100,000 euro invested in the global stock market with a diversified portfolio has returned on average over the last 200 to 250 years 7% every single year. While you could save 1,000 euro in interest, you could also make 7,000 euro when investing your money. You only have that 100k once, so you have to decide what to do with it. When looking at 7k versus 1k, the decision seems a little more obvious than it actually is. Why is that? Well, the 7% per year in the stock market are not guaranteed, of course. As of this year, the stock market is even down by about 20%. So be aware that there's a tremendous amount of risk involved with leveraging. That's basically what you're doing, right? You leverage with a cheap loan while investing your money on the other hand to do some interest arbitrage. Lending money for 1% while investing it for 7%. That's interest arbitrage. And if you make the 7%, they're taxed, of course. After 25% capital gains tax and a little bit of fees maybe, you will be net at 5,000 euros a year. Making 5k is still a lot better than saving 1k, but be aware that there's a tremendous amount of risk behind that strategy. And that's why your way of doing things might be different than another person's way of doing things or my way of doing things. Because everyone has to find his best compromise between the psychology of the mortgage versus investing debate and the cold hard math behind it. And that's the beauty behind personal finance that still gets me excited every day. Hopefully this answer was helpful for you, Bruce Banter 99. See you in the next episode of Financecouch.